Hey everybody, so today I wanted to make a video on Microsoft, and I haven't done one of these videos in a while. And I also, I never asked this, but I'm hoping you guys can subscribe, like, or comment on this video because these are the type of videos that I really want YouTube to pick up on. Now, I know that the technical analysis videos are helpful, but I mean, they're really only short-term helpful, whereas these type of videos where I'm going over financials, these are long-term helpful in my opinion. So this is what I want YouTube to really pick up on. And if you guys can help me out by subscribing, and commenting on this video, then I would definitely appreciate it. So going straight into it, I like to go on Yahoo Finance just so I could get this clean view of what this company looks like. So starting with the income statement, we're going to do horizontal analysis. So just a reminder, horizontal analysis is when you're looking at line items over a period of time. So we're looking right to left, and TTM stands for trailing 12 months. So we're going to look at their total revenue, and we can see that this is increasing every single year. Cost of revenue is also increasing every single year. And before I forget, let me just zoom in on this so you guys can see this a little better. Gross profit, it's definitely increasing again. Now we're going into these massive numbers. This is like 127 billion right here. So, we could skip all the way down to earnings before income tax depreciation amortization. Now, in 2021, they made quite a bit of money. And if we're looking at the trailing 12 months, they're making $95 billion when you're taking depreciation and amortization out of the picture. So over to their cash flow statement. Look at the cash flow statement. Oops. So here, let's see if we can refresh that. So looking at the cash flow statement, what I always like to look at is the stock-based compensation. So you can find the stock-based compensation underneath the operating cash flow. And we see this line item right here, stock-based compensation. So we're looking at 2018 to the trailing 12 months. So here in the past, they were paying about 4 billion, 4.6 billion, 5.3 billion. Now we're paying around 6.7 billion in the trailing 12 months. Now, the one thing that you also want to pay attention to is repurchase of capital stock. So, um, they're paying out about 6.7 billion in stock-based compensation. They're repurchasing about 30 billion right here. So, I mean, we're definitely seeing repurchases outpace stock-based compensation, and that's a very good look on a company. There are many, many companies out there that do share repurchasing, but their stock-based compensation actually outpaces their share repurchasing. So you still end up with dilution. So you have these investors jumping up and down about, oh, this company is repurchasing 6 billion in shares or whatever, and then they could be doing stock-based compensation of 10 billion. So I mean, here you see a repurchasing program that is actually meaningful and is actually rewarding investors. So investors can be rewarded by share price appreciation. They could be awarded through dividends, but in most of these mega cap tech stocks, they're being rewarded by share buybacks. So when a company is repurchasing their stock, they're making you more of a larger shareholder. So it's the opposite of dilution. When a company is diluting shareholders, you're becoming less of an owner. So this is definitely a good look. Now, free cash flow, we also see free cash flow basically doubled from 2018 to the trailing 12 months. So this is great. I mean, with all this cash flow, they could start doing all these different acquisitions or whatever. And we saw that Microsoft did that acquisition of Activision Blizzard, and it was like a full cash offer. So company having good cash flow can definitely give them all these different buying opportunities. So it's a very important metric. Now we're going to go over to the balance sheet. And I'll kind of show you what I like to pay attention to. So when I'm looking at the balance sheet, I like to look at the current assets and the current liabilities. So if we're looking at the company's current assets, we're looking at cash, cash equivalents, and short-term investments, and receivables. These are going to be the most liquid. So when we're looking at these two, it's about 170 billion, so that's quite a bit. And we're going to compare this to their current liabilities, which is about 90 billion years. So it's almost 2 to 1. They almost have 2 times more very liquid assets versus short-term debt. Now, when we're looking at their non-current liabilities and we're looking at their long-term debt, it's about 60 billion right here. And we could go into that a little bit more when we jump into the 10Q. So just looking at the rest of the balance sheet here, I also like to look at ordinary share number. Now we saw that the share repurchasing program was actually making a good dent, and you can see that right here. So we see that the ordinary share number is going down. This is very good when you're looking at companies. So you really see this in these mega cap companies that have tons of money that are repurchasing their shares, and this is a great way to reward investors. And it's also a great cushion when the market's having some downside. So here we can see that this number is going down. Very good. So now we're going to jump into the Form 10Q. So to get here, you're actually going to type in Microsoft Investor Relations. You're going to go to the SEC Filings tab, and then you're going to look for their most recent 10Q report. So here we see this is for the quarter ended December 31st, 2021. So now we have this nice little search box, and I'm going to take advantage of this little box right here. So we are going to go to page 20, and then we're going to see that long-term debt structure right here. So here we have effective interest rate, stated interest rate. So effective interest rate is taking into consideration the compounding interest. So this effective interest rate is always going to be higher than the stated interest rate because it's factoring in that compounding interest. So here we see that they're issuing a little bit of debt every single year. And I say a little bit, but I mean, it's actually 3.8 billion, 4.8 billion. I mean, this is a lot to us, but to this company, it's really not that much. So now here we have this nice little table, and it tells us basically when these notes mature. Now, maturity is when we have to pay the total amount of the face value of the note. So, like for example, you could go over here, 2009 issuance of 3.8 billion. So, at some point in the future, they need to pay the full 3.8 billion. So that's basically what maturity is. Basically, they're paying that full amount at some point in the future. So when we're looking at this, we see that there's not a whole lot that has to be paid in the next few years. But after most of their debt matures after 2026. So we could see after 2026, it's 42.47 billion. But in the shorter term, they're not really paying too much. So this is good when you see it spaced out like this, because it means that they don't have this massive liability in the shorter term future. So now we are going to look at page 22. And I like to talk about this deferred revenue portion. So sometimes when you're looking at a balance sheet, you're going to see this little line item. It's called deferred revenue or um, unearned revenue. So basically, what deferred revenue is think about like a landlord and tenant situation. So if you're paying rent, you're going to pay that at the beginning of the month, and the landlord isn't actually going to recognize that revenue until the full month has passed, because they have this performance obligation where you basically have to live there for a full month for them to recognize that 1 month of revenue. So this is kind of what's going on here. So Maybe this could be like a subscription or it could be like some ongoing service. But the point being is that they have this revenue that they can't necessarily recognize at a certain point in time. They have to recognize it in the future. So when we're looking at this balance here, it says that the beginning balance is 44 billion. They added more to that in deferred revenue. So this is actually considered a liability. So they added more to that. And then during this period, they were able to recognize 51 billion. So this is just like a little interesting tidbit that I wanted to talk about that, maybe you're interested in, maybe not, but, good to talk about anyways. Let's go to page 24. What I want to talk about here is litigation. So there's a lot of times where you're looking at the headlines and you see these ongoing court cases or whatever, and the stock starts selling off, and you see in the comments section all these people saying, "Oh well, this company is in deep water," blah 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 blah. But when we're talking about the monetary loss, I mean, let's just read this. As of December 31st, 2021, we accrued aggregate legal liabilities of 352 million. Now, this could approximately reach up to 500 million. Now, we saw that Microsoft makes like over 90 billion. So, what is 500 million to them? I mean, it's a drop in the bucket. So, when you see these, court cases or these litigation, whatever, I mean, to me, this is like a buying opportunity because you're seeing a serious reduction in market cap, but like the amount that they actually have to pay for these litigations is not that much. So definitely don't get too scared over these litigation cases, and definitely look into how much it's costing the company because 500 million to a company that's making 92 billion in a year, it's not that much. So now let's go over to page 25. And this is my favorite part, which is the share repurchase part. So it says here, on September 18, 2019, our board of directors approved a share repurchase program authorizing up to 40 billion in share repurchases. And basically, this was completed in November 2021. So this program lasted 2 years. So in 2 years, they spent 40 billion in share repurchases. That's 20 billion a year. And when we saw, let's go back to their stock-based compensation. Going to go to that cash flow. Now we see their stock-based compensation in 2019 is like 4.6 billion, and then 2020, 5.2, 6.1. We add this all up, and that's like about 16 billion. So 16 billion in stock-based compensation, 40 billion in share repurchases. Clearly, it's being outpaced, so that's a good sign. Now here it says on September 14, 2021, they authorized 60 billion in share repurchases. As of December 31st, 2021, 56.3 billion remains. And here we can see how they're purchasing. So in the first quarter, they bought 21 million shares. They spent about 6.2 billion. Second quarter, 20 million shares, spent 6.233 billion. So it looks like they're spending about 6 billion every quarter. So you could kind of do the math here. I mean, this is probably going to last about 9 or 10 quarters if they do this consistently. So, this program might last 2.5 years or so. Now let's go to page 28. What I like about looking at a 10Q versus going on Yahoo Finance is that you can see that this revenue is actually broken down into segments. So here are their different segments. So we see server products and cloud services, office products and cloud services, and Windows. This is making the majority of their revenue. And we see here 3 months and 6 months, and they're comparing 2020 to 2021. So we could see some significant increases in their service products and cloud services. So here we go from 24 billion to 31 billion. And, we're not seeing as much in these other segments, but I do want to note that devices is actually decreasing. And if we want to learn a little bit more about what each of these line items are, we can scroll up and then we could go to this page right here. It's on page 27. They talk more about these individual line items. So here we can see devices include Surface and PC accessories. We can see when they're talking about gaming, they're talking about their Xbox hardware and Xbox content and services. And over here, service products and cloud services include Azure and other cloud services, SQL servers, Windows servers, Visual Studio, system centers, and related client access license, and GitHub. So, information right there. Now, if we go down to page 31, we can see, let me just zoom in a little bit. Probably should have done this earlier. We could see that they talk about their highlights for the second quarter of fiscal year 2022 in comparison to the second quarter of fiscal year 2021. So, just a few moments ago, I talked about the different segments. So, you might read here LinkedIn revenue increased 37%. And you might say, wow, that's crazy. But think about it LinkedIn revenue was not that much of their total revenue, it's just a small portion of it. So, when you're looking at the information that I just talked about, you can kind of see how everything is weighted. So, you can kind of understand the significance of these highlights. So now when they're saying Microsoft Cloud revenue increased 32%, well, that's a lot because their cloud is actually a large percent of their revenue. So this is like the information that you want to zoom in on. So their cloud is what's making them a lot of money, not their LinkedIn revenue. So that's most of what I wanted to talk about for the 10Q. Now, what I'm going to go into next is the charting. So we go on and we zoom out. Let's just look at the 5-year. Now we can see that Microsoft has been following this trend. It's been staying within this trend channel for quite a bit. If we're looking at the 1-year chart, the 100-day moving average was strong support. We see it time and time again. So we see support right here, right there, right there, right there, right there, and right there. Finally, we break underneath the 100-day moving average. And currently, we're messing around with the 200-day moving average. We're slightly above it. We are above the 50-day moving average. We have this curling 20-day moving average. And essentially what I want to see is I want to see Microsoft get back above the 100-day moving average. I want the 100-day moving average to continue acting as support. And I want us to get in this trend channel again, like deep in this trend channel. Before we were moving in this trend channel, now we're slowly getting back into this one. So as things stand right now, Microsoft looks okay to me. But the closer it is to the 200-day moving average, the more risk there is. So for us to feel totally safe on Microsoft, we need to distance ourselves from the 200-day moving average. We need to get back above this 100-day moving average. And if we're looking at resistance right here, I will put resistance right there, which is this little line right here, which coincides with this top. And notice that this line right here also coincides with the 100-day moving average. So definitely no coincidence there. So that's the technicals. Now I do want to point out there's this amazing website. It's called macrotrends.com. And you'll just type in Microsoft. You'll go to price ratios and you'll look up a PE ratio. So what this does is that it gives us diluted EPS and it calculates the PE ratio for us. So currently at this point in time, based off a price of 304.10, which isn't too far from where it is now, it's showing that Microsoft has a PE ratio of 32.39. Now, when we're looking at this historically, this could be considered a little bit high because back here in 2019, we were seeing PEs of around 20 to 25. So 32. When these multiples get higher, it's because people are expecting nice forward earnings, So let's just look at their EPS here. So their EPS has been growing. So we see right here, it's been growing. So what can you expect in the future? Probably more growth. So that's why these PE ratios are a little bit higher than what they were before, because people are expecting good things from Microsoft and they're willing to pay this premium. So is Microsoft cheap right now? I mean, I honestly don't know. I mean, if they continue this growth, then yeah, it could be cheap right now. But if they all of a sudden start declining, well, then it could be considered expensive. So, I mean, let's just look at what Microsoft would look like if we're looking at a 25 PE ratio. So the way you calculate that is that you just get the calculator. We're going to get the calculator right here, and we're going to basically get 9.39. We're going to multiply this by 25. Oops. And then we're going to see 234. So basically, if Microsoft is trading at 25 PE, well, then it'll have to be $234 all the way down here. I mean, Microsoft would have to fall quite a bit. So, I mean, what you would expect is this head and shoulders pattern to play out and the shoulders to end all the way down here for Microsoft to get to that 25 PE. Now, I mean, that may happen, that may not happen, but if it does happen, I would say that that's a fair deal on Microsoft. And maybe right now you're paying a lot, or maybe not. So, I mean, I guess only time will tell through earnings. So I hope this video was helpful to you guys. And if it was, definitely like, subscribe, or leave a comment. And have a great day.